Welcome back, my finance nerds. Now let's quickly get into it. Afterpay has just announced that it's going on a capital raising as of today and has halted all share trading on the 7th of July 2020. Now, to be honest with you guys, I wasn't expecting this because had they have wanted to go for a capital raising, my expectations and thoughts behind it was that they would have done it in either March when, things started to go lockdown mode and, there wasn't much trading to be done, or even in April where some more companies started to raise some capital in the ASX. But in fact, the opposite actually happened. We received that their sales were going through the roof and that the company was doing quite well and the balance sheets were actually looking good. Except the price of the share actually had plummeted to about $9 a share. And for those of you who bought in at that price and are still holding on, well, kudos to you. And that's when the crazy surge started to happen. Now, hitting at $20 a share, it's kind of whatever, it's balancing out. Then it went to $30 a share and people were thinking, here we go, we're going to get back to normal levels. We should be, staying around here. And if you're a bear, you're going to say, well, no, it's going to go down from here. It just went up another about 200%. And then it hits $40 a share and things start to get a little bit crazier. And looking at the share price now, need I say more? Because we are past the $60 mark. And at the moment, it's a bit of a crazy roller coaster with many sentiments. Many people are feeling a bit of FOMO at the moment, whilst others are smashing that like button, which you should be doing. So give, yourself some time, smash the like button down there. And if you're a new viewer to this channel, welcome on board. Please consider subscribing. I do make content about money, stocks, all that type of stuff relevant to Australia. But if you're from abroad, welcome on board also. And I hope you guys enjoy the content. And without further ado, let's get into the ATP or Afterpay presentation for their capital raising. So Afterpay is looking to raise $800 million in fresh equity for the company's expansion. It's said that the company is looking to go into other markets to expand its current market share, and in particular, looking to go into Canada to expand its ventures in the North American space. Now, generally when there's any talks about the US, it's always good for growth. And I'm not just talking about market share. No, we're talking about share price as well. Because for Afterpay, each time it's provided an update, there's always been a jump in share price, and which has taken it and skyrocketed it in front of any other buy now, pay later, or any payment services that we have in Australia. Now, if we look at the Canadian market, it's big. It's bigger than Australia in terms of population, but it's so small when you compare it to the US market. Now, this entry isn't going to happen until about late 2021 or early 2022. And I have no doubts that Afterpay is going to be able to make it over to Canada and into that space. Assuming, of course, there are no legal ramifications or issues that it might run into, like it has in Australia and over in the US. Now, this move for the capital raising, I think, has come at an appropriate time. Now, think about it. Online consumer spending is at an all-time high. And during this time when financing is cheap and also that its shares have hit at an all-time high, it's getting some good equity in its pocket at a high enough price where there isn't too much dilution at play. With growth in mind, they've also gone up in many of their key metrics. These key metrics they would normally track to gauge their performance, and we can see that in their underlying sales having gone up by 112% to $11 billion. Active customers has risen to 9.9 million, which is up by 116%, and merchants that they've acquired and partnered up with has gone up by 72%. So they're currently growing on all fronts, and it makes sense when they're pitching this to new merchants to flex with how many users they have currently, because what that shows is that one, they have a ton of leads within the given markets, and number two is that they also have figured out and have the capabilities of stopping people from abandoning their carts, because they can buy it now and pay for it later. Now, if we're looking at growth by regions, the ANZ market is doing pretty good because it's grown at 52% in terms of purchases made. But the US is by far taking the biggest leap in terms of percentage growth by being up 330%. And yeah, the UK, well, they're doing pretty well, but it's not that much in comparison to the other two. But if we look at the US merchants, there's still so much room for growth. Now, they've got still another 3 quarters to grow to get up to the same amount of merchants that are in the ANZ region. However, if you look at the customers in the US, it exceeds and far exceeds those in the ANZ region. Now, this is obviously due to population because the US is gigantic in comparison to the Australian population, but also there's the component that the US consumer, well, I guess their nature is more consumeristic. Like they just buy a lot more things and have a higher appetite for debt in comparison to Australians. Now, with US merchants in mind, Afterpay is also looking to launch in stores in the US in the first quarter of the 2021 financial year, which, assuming with stores open at that time, should kick off rather well. Now, the last thing and probably the most interesting part is that they're looking to make some possible M&As. That's mergers and acquisitions with some smaller companies to accelerate their expansion. First is that they can acquire the team within the given area who already have the technology, they have active customers within the area, they have any licenses, and they also comply with the regulation within that space. So there's a lot less headaches that Afterpay has to take on when venturing into spaces like Canada. Secondly is getting any technology that might come with that, which might enhance Afterpay's services in their technology, or might help with their communications, because remember, technology is one aspect, but communicating that between merchants, customers, and the technology facilitating that is another aspect, and it might help them either in that specific region or help them just globally improve as a service. Now, capital for mergers and acquisitions is something that many companies have done, and for Afterpay, I'm not surprised that they're taking the same approach. Just have a look at Z1P and EML Payments, who have been upfront in buying smaller companies globally, which we see in EML Payments going over into Europe, parts of the US. And for Z1P recently, in one of my most viewed videos, they made the acquisition of Quadpay to head over to the US in chasing the tailwinds of Afterpay. Now, there's one important thing to note, and I guarantee it's going to be in the comments somewhere if I don't mention it. It's that there's going to be a solid sell down by two of the founders of Afterpay. Now, the founders are selling about 10% of their shares, which represents 2.05 million shares whilst the placements are taking place. And just to give a rough estimate, it's probably worth about $250 million. Now, what are my thoughts behind this? Now, I've said it in many comments. If you go through the comment section in my videos, I've given my thoughts around this. A lot of these founders, they put all their time, effort, they give up so many things and aspects of their life to be able to create a company, to take on all the stress and whatnot. And eventually, they're going to have to cash out. Like these founders, they hold millions and millions and millions of shares, and shares are worth what the market dictates them to be, right? So they really can't buy you anything else. And at some point, they're going to have to cash out. If they don't cash out now, which strategically makes sense because it's at an all-time high, when do they cash out? Do we then critique them when they cash it out at $100, $110? At some point, they have to cash out. And I think it's okay, given they are still majority shareholders within the company. And so a majority of their wealth is still tied with the company. And so I don't think that they would detrimentally do anything bad to harm that, because, well, that's their, pockets being harmed by the end of the day. So let the boys buy some boats, some cars, whatever they need to do to get their fix and just move on with it and make Afterpay great. In saying that though, they did say that they just need to diversify their assets and have some liquidity. So like I mentioned, fair enough, fellas, go for it. Now, they did promise that they won't be selling any more shares until the next AGM, but that's not too far away. I'm pretty sure that's in November. Every single November, they have an AGM. So I don't know what the promise really means, but yeah, it is what it is. It is what it is. So now that we've gone through the purpose of the share purchase plans and the share placements, what are the finer details of them? What does it include? What's the cost? What's the time frame? Let's go through all of that right now. So the capital raising is looking to issue $650 million in shares in a share placement, which is where they are being purchased by an institution, because the volume is so big that they can get it at a discount. And Buffett does this quite often, or any big investor. These shares are being offered at $61.75, which is a 9.2% discount from the closing price on the 6th of July 2020. Along with that, they are putting a share purchase plan, or SPP, for current shareholders that's looking to raise $150 million, in which Australian and New Zealand shareholders can purchase up to $20,000 worth of shares, which is about 300 shares or so. So here we have the time frame for the whole process, which looks like it'll be finalized around the 10th of August 2020, and about a 15-day period to get your purchase plans through via the SPP. And so your question might be now, should I be purchasing the shares? SPP's on the line, shares done quite well, company's done quite well, on paper it seems anyways. What should I be doing? But luckily for us, the company has already outlined some risks, so let's go through it and see whether it's worth buying into. First on the list is compliance issues they could face with changing laws or going into new markets, We've seen this not only in the Aussie market, but also in the US. And each time something like this has happened, it's put the share price in question. In saying that, they have come out every single time on the other end. But I wouldn't be surprised given ASIC has the power to put restrictions, regulations, compliance orders on any product or service that it deems to be inherently risky to any consumer or customer. It generally follows like a trend of like people doing stupid things, and ultimately then it goes, okay, we have to put something in place to stop people from doing that stupid thing. And so for Afterpay, it might be that it costs them more money to meet the compliance orders or just comply with regulations that are put in place. Second risk is that they could lose key contracts because, well, at any time they could just have merchants cut them off. And market conditions could change, which mean more closures of shops, and boom, there goes another merchant. This ties in with their third risk, which is competitors and changing markets. Now, Afterpay has one of the biggest charges in all of the payment companies, which goes up to about 6% with a small fixed charge fee. So there's no reason why a struggling company or struggling business wouldn't switch to another service like Zip or Split It, both of which are in the US now. And now to ensure that Afterpay does really well and remains top dog in this space, it has to make sure that its technology is up there and up to date and doesn't fail. And it also has to make sure that its communication is also up there, because there needs to be a communication between the consumer over to the technology and the technology over to the merchants. Because at the end of the day, all that matters to the merchants is that one, there's a lead generator, which is the communication between the consumer and the technology. That's the lead that you're going to then hopefully make into a conversion for the merchants, because then that is dollar bills within their pockets, right? So that's going to make sure that they stay top dog. Now, I'm not going to go into too much more detail about each of these, but it's obviously got some debt and funding facilities which are inherently risky, and any failure of their tech or communications network would mean that people can't use their services, and obviously, well, there's no customers because nobody's using it. Now, what I actually found really interesting was risk number 12. Because now we're looking at its continued integration with other platforms. And it came out not too long ago, if you saw in some of my other videos, that Shopify wanted to do a buy now, pay later service. And with many e-commerce stores using Shopify as a platform, it could be the case that Shopify just says, if you're using our platform, you've got to only use our buy now, pay later service. Or alternatively, we'll also give you a discount on the merchant rates if you use our buy now, pay later service. And the merchant discount might be so big that it's really hard to ignore. Also, because Shopify is an online e-commerce platform, I would have no doubt in their technology or their communication to be able to integrate it and make it seamless for the consumer, which of course would take Afterpay out of the picture immediately and make them lose a lot of merchants that are online. But yes, that was it for me. That's my thoughts on the ATP or Afterpay capital raising. What are your thoughts? Are you guys holding any shares? Are you guys buying any shares? Leave me some cash emojis at the bottom if you've made it this far to the video. I know my voice is breaking or it sounds a little bit raspy, maybe like a little bit like Batman. I don't know. But that's all from me, guys. I hope you guys have a great rest of the week. Might have a video up, might not have a video up. See, my voice is dying anyways. But I'll catch you guys later. I hope you guys enjoy the videos. Cheers.